Hey guys, it's 12:19 a.m. on February the 25th, and I wanted to do a quick video about the importance of ranked trades, and in particular top ranked trades ranked number 1 or number 2 or number 3, anything really in the top 5. So first I want to show how to find them. This is the trade screen here. Click this link, you get all the trades. You can change the date and some other things, but you can also filter out anything that's ranked in the top 100, top 50, and so on, all the way down to the top 5. So if you click this, it'll quickly show you all the trades of a given date that are ranked in the top 5. You can see them here in the rank column. And anything that's ranked in the top 5 is particularly important. Because generally speaking, if a trade comes in and it is ranked in the top 5, particularly if it's the number 1 or number 2, it comes at a high, a relative high, it's almost certainly the end of the run. It's a common pattern. I've talked about it numerous times for anyone who's followed, but it is something that I look for on a regular basis, and it is a really, really strong exit signal for long positions when these things arrive at highs, and they're far more common at highs than lows, but I wanted to show some examples here, and there are different ways in which they arrive and different things that happen after they print. So starting first with this stock here, USRT. This is something that printed its number 1 trade on February 6th, so just a couple weeks ago. You can see it came up here right near a relative high, and immediately we started to get a turn down. This was a very strong exit signal for anybody who happened to be long, and it had a rather immediate downward resolution. It came here on the 6th, it just took a couple days, and finally it started to drop. Over here, though, we have a stock that is far more popular and liquid than this USRT stock is. This guy here is pretty thin, and what's important to note is that the thinner the stock, the more quickly it tends to resolve lower. Here we have Home Depot, and it got the number 1 trade on November 30th, and it's now February 25th, so it's been nearly 3 months. And if you look more closely, you can see that it arrived here, which told me this is the time to exit longs if you have them. Certainly some people would have attempted a short. But this is an exit signal, and this came here on the 30th. And because it is such a popular stock, and because it is thicker and more liquid, it took a long time for it to resolve lower. You saw we got a spike up, and then we got a bunch of chop, and we got a little false breakdown, and then another spike up. And now finally, it appears to have broken out of this range that it's been in for nearly 3 months. So when you have number 1 trades across thicker, more liquid stocks, particularly ones that have been around for a really long time, the time it takes to resolve is generally longer than, for example, what you see here with USRT. So moving along, we have ENPH, which printed the number 2 and the number 3 recently, back in November. I've also talked about this one before. And the 2 and the 3 came, and it chopped for a while, and it spiked up a little further, and this one was also popular. This one was also heavily traded, and it took a while to resolve. But it finally did sometime in December. So it spent about a month up here after these trades arrived before we got this breakdown. And you can see when the number 1 trade arrived back in 2021, the same phenomenon. Number 1 trade arrives here at a peak, and not long after, you get a pullback from 200 and whatever, 203 down to, I don't know, 100 and around 100. We'll say it's around 100. So quite a big drop there once the number 1 trade arrives. So this is, again, I keep repeating myself, but it's an important signal, and they're easy to find. Go to the scanner, search for anything that's ranked in the top 5, and on any given day, you'll see a bunch of these show up. And some are worth trading and some are not, and that's entirely up to you. But many of these happen to arrive at highs. Looking back further, this is CSCO from all the way back in 2019, just to show you that this is not a new phenomenon that's consistent with the current market regime. The same thing happened then, long before the bear market began. CSCO came in, number one share, on June 28th, 2019, and we got a little overshoot here. It took a little while to finally resolve, but once it did, down, and it hasn't recovered since. So, well, actually, this chart only goes to 2020. It may have, I'm not sure, but the point remains that once this trade arrived, we got a substantial pullback, and it's a great indicator of just that. Here's one from over the summer. This is VERU. This is a biotech stock. It's really thinly traded, and this is a perfect example of seeing a really large trade come in on a thin stock, and you get the immediate reaction. This thing printed, and the very next day, steep decline. And I remember talking about this as well. But because this thing isn't as popular, because it doesn't trade as thick, because it's not as liquid, because it's just, there isn't anything to keep it up there very long, these things drop like a rock. So, yeah, this I think dropped 20% the first day after this came in, and it continued dropping. And you see it hasn't stopped. So this printed at 23.78 back in August, and now it's trading under $4. So, and this thing is, in my opinion, not likely to recover, or at least there aren't any signs that I've seen that suggest that it's going to rebound. KOLD, our old friend KOLD from just a few days ago. We've been talking a lot about nat gas. Another perfect example. KOLD trades relatively thin like VERU does, and despite the fact that we got this overshoot, we've now got 3 strong red days in a row. I don't know how many more they're going to be. I don't know how long it's going to last, but I am confident that this is a topping signal, and that nat gas is not likely, in my opinion, to make another low for a while. If ever, I don't know. But I think in the immediate term, at least the way I'm viewing this, is that KOLD is a good signal that longs were being closed. Institutions were exiting their longs. We got that spike that we talked about. And now the drop has begun. 3 strong red days in a row. And it may bounce up again. You never know. This is a level here of some degree of support. Maybe it bounces up, maybe it does a head and shoulders, I don't know, but the point remains, this came in, it was a signal that the top was near, the high was near, a great excuse to exit KOLD longs or gas shorts. And I got a million of these. This is ExxonMobil. This is something that, like Home Depot, very popular stock, might take a while to resolve, but the number one trade did come in December 16th. That was an OPEX day, so you expect elevated volume anyway, but look at the run it's been on. For the last 3 years since the 2020 lows, it's been on a pretty steady rally. Very few pullbacks, and the ones we got were pretty shallow. And then this trade came in, and it's actually gone up a little further. This trade came in at 104. It's now 110. I think it got up at almost to 120 here. I think it was 119, somewhere in there. It was the high. But I do expect this to ultimately resolve lower. Now, how long it takes, the path that it takes, is very difficult to predict. But what I am confident of is that institutions use this as an opportunity to exit their long positions. And when you look at the chart, it makes sense. It's come a long way. And stocks don't go up forever. Trees don't grow to the sky, right? Here's another one, FXN. This just came in recently, February 10th, and I posted about it as well. And this is also energy, so kind of similar pattern here with XOM. I think XOM is one of the larger components of FXN. But it's been on a 3-year run. We got a number one trade, and things have started to resolve lower now. This is at 1652 today. It came in at 1725. Nobody knows how far it's going to go, but to me, I would not want to be long this index. It does suggest that the high is in or very close. Even if we do get another spike up, even if it does chop for a while, even if it breaks down and comes back up, this to me suggests that the meat of this rally is over, and pressure will be down. And then one last one. This is also a recent post. This came in just 2 days ago. Oh, look at this. I'm going to close some of these windows. Here is IoT. I've never heard of this company before. Don't care. Samsara. I don't know. We have 5 trade clusters up here in this zone between 1570 and 1610. So a lot of activity. And among that, we got the #1 trade. It's 30 times larger than average. I'm sorry, not the #1, the #2. This is a #2 trade. I think we also got the #6 on the same day. So, again, same idea. Really, really, really disproportionately large trade relative to all the other trades of a given ticker, arriving at a high. They generally tell the same story. So I do expect this thing to resolve lower. It does not appear to have really substantively moved. I know we got a big red candle here, and now we got a bit of a rebound the next day, but I think over time this will start to resolve lower. So that's it. Like I mentioned, easy to find. They come in every day. Choose a date, filter by rank. You get a quick list. You can take a look at these stocks. You can see how many might be at relative highs or relative lows. Sometimes they appear in the middle of a pattern and they're not nearly as helpful, but often, at least often enough, they appear right there at near a high. So that's it, guys. Thanks for listening. If you have questions, send me an email. Some links here at the bottom. Everybody who joins gets 7 days for free. After that, it's pretty cheap. Great way to find exit signals. That's it. Thank you. Bye.